What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you guys give me a like too. I put some time and effort on this channel, especially doing a stock and dividend analysis on stocks that I own. So this is KeyBank. This is a stock that is below $20. And I like this stock for a few reasons. I'm going to compare it against the S&P. I'm going to compare it against two other stocks that are financial stocks or bank stocks that are less than $20. And I'm going to show you its dividend history and how many shares I own with KeyBank and what I plan on doing. So again, if you guys are new, you got to hit that notification bell so you don't miss future videos, and let's go. Okay, so here is KeyBank. It is right now sitting at $12.17. As you can tell, this is when the recession hit. Everything took a big nosedive. That's kind of a given. Anything that is a bank stock or financial stock in the financial sector took a huge nosedive. A lot of stocks did take a nosedive during the recession. Right here is when the bug hit. So let's see how it's done in the past 5 years real quick. It's gone up. Okay, slowly gone up. And then boom, the bug hit. $9.19. Now it's back to $12.17. It's slowly going back up. Let's see how it's done financially as a stock. In September, it was down 7.24%. Net income 13.69%. Net profit margin 6.97%. Operating income 15.75%. Doesn't look very attractive. Revenue has gone down 4.1%, net income down, diluted EPS, net profit margin is slowly going up, operating income is down, net change in cash and cash on hand. Obviously when March hit, the bug hit, it is $24.26. It is down net income-wise 64.13%. June, down 19.69%. Still, the revenue is $1.23 billion. That's attractive. Net income is down 56%. What a surprise when the bug hit. Cash on hand's up, and operating income and is a little bit down. I do own KeyBank. I signed off on a loan on my 2012 Toyota Camry 2 years ago, and they gave me a very beneficial and maybe showed some gratitude towards my loan. It was only 5%. And I'm going to try to hustle it to get it down a little bit more. So I paid about $143 a month, made a down payment on $3,000, and I picked up a lot of shifts to make ends meet. My car was tore up. My 2004 Camry was just at 200,000 miles. So I got a pretty good deal on it. These guys were pretty professional about it, and they show me on their website how I'm doing, and that I'm making payments on time to get my credit score up, and they show me my credit score. So very small company. It is a very attractive company. Let me just show you how it's done against two other competitors. Another competitor it has done well against is Huntington Bank shares. As you can tell, when the recession hit, KeyBank took a nosedive. Huntington did as well. KeyBank slowly got up and has responded pretty well. So it is up 429.67% to 289.55%. So that's a good one. I'm going to show one more competitor and how it's done, and then we're going to compare it against the S&P. I would consider this another competitor as well, Regions Financial Corp. KeyBank has done well. It is 482.30% to 335.88%. I actually own all three stocks. So they are down, they're below $20, and I took advantage of it when the bug hit. I do like the quarterly dividends on KeyBank, which I will discuss in a little bit, but let's see how KeyBank has done against the S&P. So before the recession hit, KeyBank was killing the S&P since inception, and they like to compare when KeyBank started versus the S&P. So KeyBank has done well, and then the recession hit, and then KeyBank slowly started to tumble, started to rebound a little bit, and then it's up 482.30% to $2,657.68. Let's see how it's done in the past 5 years. It was somewhat in line against the S&P. So it was going up. It was beating the S&P in the past 5 years. And then, slowly it started to dwindle. S&P took over. The bug hit. And then obviously the financial sector took a huge hit. So that's why you need to be diversified a little bit. In the past, as you see, the past 5 years, KeyBank took a hit. Slowly, I see it coming back. But let me show you what's attractive about KeyBank and its dividend history. So that's one thing to look into with KeyBank. So we're going to jump to its dividend history. 2013, KeyBank was about 5 cents a share. 2014, it went up to 0.065. Then 2015, 0.07. So it's almost going up a cent a year. Then all of a sudden, in 2018, it was 17, then 18 cents a share. So that is very attractive for a bank stock that is less than $20. It's giving off almost 19 cents a share. That's one of the reasons why I own KeyBank. In its history, it looks like it's right around a 3 to 5% dividend yield. So if you're a dividend investor, if you own an IRA and or a Roth IRA, this is a stock that'll slowly go up. Again, if something like the bug hits or something, it's a little bit more volatile, but it's a very attractive stock. And I just bought some shares in it today. I'm just going to show you my plan and what I plan on doing with KeyBank because I invested with KeyBank. So I'm getting a nice dividend yield. It's slowly increasing over time. So that's one thing you want to look at. Past few years, it's always important. 2013 to 2020, it has gone up. So that's a very attractive thing with KeyBank. And that's why I put some money in my E-Trade dividend portfolio. Now I have an M1 Finance dividend portfolio, but I also have an E-Trade dividend portfolio. And KeyBank is actually getting me closer to making an anticipated $1,000 a year on dividends. But again, there are some stipulations I will show you and explain to you the expected income. But with KeyBank, I'm going to get a nice dividend income in the future, which we're going to jump to E-Trade right now. So as of right now, I own 26 shares in KeyBank. I got it when it was a little bit down. I gained $1.22 overall. I put in $200 today in KeyBank. So here's Regions Financial. Obviously, I got that when it was way down. Here's Franklin Resources, another stock that I own. And here's Huntington Bank shares. I got it when it was really low, and I have 21.35 shares. So this is going to help me get to my $1,000 a year mark. So Invesco wasn't doing too well, and this is a reason why I put some money in KeyBank, because I need to focus a little bit on the financial sector as well. So if Wendy's is taking a hit, or Norton LifeLock's taking a hit, or Store Capital is taking a hit, I have the financial sector to help me out in the long run. So I do own an M1 Finance dividend portfolio. I did mess around with KeyBank, have it here and there, and then change my mind a few times. But I'm going to keep KeyBank over here where I have 26 shares right now. And 26 shares, let's just look at the dividend history again. If we calculate, let's just say it's 15 cents times 26, about $3.09 per quarter. So it's almost like 3, 6, 9, 12 right there. I'm almost buying more shares of KeyBank. So I'm buying it when it's down. It's less than $20. It's eventually going to go up. I mean, bank stocks usually fix themselves and go up, unless if you're an idiot running a bank or you're poorly managed. Even Wells Fargo has some issues, but they're still going to be strong in the long run. So the financial sector is very attractive for dividend investors, and I highly encourage you guys to have a very balanced dividend portfolio, not just in real estate, because look, ABR, I got them when they were low. Maine, well, let's just look at Americold Realty Trust. I got them when they're down. And look at Realty Income is down, and EPR Properties is down. It's right at $30.62 a share. I mean, I'm down $1,000, 55.28%. Can you, I mean, that sucks, but that's why you got to be diversified. And eventually the dividend portfolio will grow and fix itself. But I got all these guys like KeyBank to back my ass up if I took a hit. Look, even Wendy's dividend was cut. I'm a huge fan of Wendy's with the stock. It's a fast food stock. I see a lot of growth and potential in the future with that one as well. Even Store Capital took a hit. So look at this. I'm putting money in, okay? My money is making money, and KeyBank is going to help me get to $1,000. So that's my rationale why I bought KeyBank. I always like to show a stock and dividend analysis in stocks that I own. So, make sure that you guys subscribe to my channel and hit the notification bell so you don't miss future videos. And again, give me a like, and don't forget to watch future videos. Keep an eye on my channel. Just YouTube search Darth Dividend. I also have a lot of stocks that I have videos on. So when you click my channel, you'll see things on Conagra Brands. I did one on Americold. I did one on eBay. I kind of did, my video was okay in Realty Income. I'll probably do another one on that. So I did one on Delta as well. In Norton LifeLock, I also did another one on that, as well as Wendy's. So check out those other videos on my channel. I have it pretty much in the E-Trade section. I do need to mess around with my sections, but look on my channel, look at some of my videos with stocks I own. These are some attractive stocks out there, and I provide my rationales why I own each of these stocks. So thank you so much. And even Invesco too. I know they're way down. They're not looking very attractive right now, but there's a reason why I put money in them, and I provide my rationale. So thank you again for watching this video again, and you guys have a good one. I'm going to turn 35 tomorrow, so I'm going to enjoy these dividends kicking in, and it's always a good feeling when you may have a rough day at work or just a rough day in general, and then you see that dividend come in. It's always a good feeling. It balances everything out. Like you may have a terrible day, but then you see that dividend come in, you're like, yeah, compound interest kicking in. So thank you again, and have a good one.